Hello and welcome everyone to our 1 year live stream. We have finally completed 1 year as a PMS and we are very, very excited about it. Today with me, I have a new team member, Pratishtha, who's joined us in our sales team. So, you guys might have been talking to Shivam, and now, if you are coming on our calls, you will see Pratishtha there as well. So, very excited to introduce a new team member and very happy that our team is growing. So, I have a very quick presentation for you talking about this 1 year, how it has gone for our portfolio management service, talking about the current market, talking about, what we are doing next, and obviously celebrating this big milestone with all of you guys, right? So I'll just move over to this quick presentation that I have created. So obviously, see, we are very excited about this 1 year that has passed, right? We have completed, we've crossed this milestone of 250 crores in AUM, which is a very big deal for us. When we started, we did not know we'll be able to do this. Obviously, the markets have been good and our strategies have done well. We are one of the top performing PMSs in the last 1 year. We've done close to 80% returns for many of the clients, and we have been able to onboard more than 300 people into our strategies, right? So all in all, a very exciting time for the PMS. Now talking about the key milestones. See, we are like I said, in terms of performance, we are in the top quartile. The AUM has crossed 250 crores. Our number of investors have crossed 100 plus. Last month has been great, especially for our alpha strategy. So I think our alpha strategy should be one of the best performing strategies, among PMSs in the last month, where we have given around 9% plus returns, right? And our performance has been stable across scenarios. And right now, our focus is on momentum and value strategies, right? So I'll talk about the factors focus also as we go. So these are our three strategies. You will see, Factor definitely has done the best. There's been a little bit concern that it has slowed down a little bit in the past few months, and that is because momentum has corrected a little bit. We made a pivot towards value in that strategy, and I think allocation is looking very strong, and we'll see the performance come up strongly. In terms of our alpha strategy, it has gained back that momentum, and it has done more than 9% in last month, and it is one of the best performing strategies, we would assume, right? So this is the performance of our factor strategy. We started very, very strong, and in the past couple of months, we've seen a little bit of underperformance, but again, we think the allocation remains strong, and we have made a very right pivot with this strategy, right? So this strategy was probably having the highest PSU defense, all that allocation till middle of the last, till the beginning of this year. And then we have made this very smart pivot, and we'll talk more about it, which has worked in favor of this strategy. And I think the performance will start sort of delivering pretty soon. In terms of momentum strategy, again, it has done very strongly in the past few months. Even last month has been strong for this strategy. So while people were waiting for momentum to work, we can see that our momentum strategy, in fact, is working. Even our alpha strategy, which is momentum based, you will see, has had a very strong performance during the last one month, right? So this is the aggregate performance of all of our three strategies. You will see factor strategy, momentum strategy, and alpha. All of them have done quite well. In terms of, how, like I said, alpha has been the best performer in the last 1 month. Now let's talk about how sectors have shifted. So let's try to look back at this 1 year. Obviously, the performance definitely speaks for itself, right? Having delivered close to 80% returns and that extremely strong risk management, that speaks for itself. But like, let's try to understand what happened inside these strategies, right, during the last 1 year. So, so this is about our factor strategy. You will see that we have actually done what have we done during this 1 year. So you would see that our allocations have shifted a little drastically in the past 3 to 6 months, right? So when we started, we had a lot of banking financial exposure, and when we talk about banking and financial, it includes the power finance corporations, it includes PSU banks and all that. We also had consumer allocation, which was relatively strong in the beginning. We had a little bit of healthcare. We had industrials, which were strong, and then we had commodities and energy. Right now, that allocation stayed strong, and then somewhere around January and March, you will see that allocation to these power finance and PSU banks had really reduced. Our consumer allocation has continued to be strong. It has actually increased a little bit. You can see that our defensive allocation again is quite robust. You will see our commodity and energy allocation. This is a commodity and energy. This has been robust, and defensive has actually increased. IT has had a low exposure. We went into cash somewhere around June and July around elections, which we have reduced totally. And our industrial allocation continues to be constant, right? So we have seen a transition from PSUs to more consumer centric defensive stocks happen gradually over the last few months. And this is, something that you would understand why this is happening, because the market is shifting. You will see right now these stocks that we've exited have really been, hammered in the last couple of months, right? Defense, PSU bank, they have hit bottoms. So we have made a very good pivot going out of those sectors. Now, talking about factor shift, you will see that momentum had the highest allocation in our strategy when we started. We had a little bit of allocation to quality, and then gold came in somewhere in the end of last year. Our gold allocation ended somewhere in May. We reduced quality and then increased it around April and May. You see, value has started getting more allocation, and quality allocation has actually gone down, right? So momentum continues to be the major allocation, but now the focus is also on valuation or value, and quality has reduced a little bit, right? So it's a very interesting thing that's happening, and we'll try to understand why that is happening. Also, talking about, while we're looking at it, let's talk about this excellent risk management that we did, which I think is a cornerstone of our tactical approach during the election season. We were one of the, on that day, probably the best performing PMS, when we saw only a 3.5% correction when the market itself crashed 6.5%. That was because we had hedges in place, which really blew up on that day, and our cash allocation was there, which we reduced, ended up buying a lot on the election day itself, right? So that was mostly about, looking back at what happened, right? So a lot has happened. We started with maybe a lot of small caps initially, a lot of infrastructure allocation initially, which has slowly pivoted. Right now, again, we have small caps, but probably not in the infrastructure segment, not majorly in the infrastructure segment, and new sort of sectors, for example, agrochemicals, textiles, and obviously the data center stocks and the green energy stocks have now gotten more allocation into our portfolios. Um, Now let's talk about the macros and what do we think is going to happen in the next few months, and how is the next year going to look like for the Wright PMS, right? So, see, talking about firstly the factors, right? We are a factor-driven strategy. So, how are the factors moving, right? So, you will see that this is the analysis of the different factor strategy. What you will observe is that in this year, the best performing factor is in fact not momentum; it is actually value, right? Value has really picked up this year. You will see this month, this quarter, this whole year, value is the better performing strategy, and momentum in fact has slowed down. So therefore, you might have seen a little bit of slowdown in some of our strategies that happened, which was because some of the momentum stocks that we were holding have slowed down a little bit, right? And obviously things will change, and let's try to analyze how things are going to change in the coming quarters, right? What you will notice here that quality has continued to be strong and stable, and what you will also notice is that earning momentum, which is based on analyst rating, has also been strong. And price momentum obviously has taken a hit, which you will observe when you're looking at people with higher focus on momentum strategies, right? But yeah, it's a cyclical thing, and this could recover soon. So let's try to understand what is going to happen in the market and what is our understanding on what's going to happen in the market. So I think the biggest concern, I think when we talk to investors right now is, you saw 80% returns, but is the next year going to look strong? We see news, in the news you will see that people are talking about how some of the mutual funds are stockpiling cash, right? You see Parag Parikh mutual fund and Quant mutual fund, in fact, as per the last reported data in July, have almost 14-15% cash in their portfolios, and on average they typically have 5%, right? So cash allocation seems to have increased with institutional investors. You will also see FII flow has been negative, right, which worries investors. But obviously the market has been strong, right? The market doesn't seem to have anything to complain. You've seen very consecutive positive days and a lot of positive sentiment, but still people who are looking to allocate right now are a little bit worried that is it the right time to invest, right? So well, let's try to understand what's happening and what are the biggest events that we are watching as investors in the market to see what's going to happen next, right? So I think the biggest thing that's going to happen, obviously, the geopolitical events are a big concern. Geopolitics will have an impact. Geopolitics, obviously is a major cue, but in economically, macroeconomically, the biggest thing that can happen, that is going to happen, is the rate cuts, right? So we saw a lot of data coming out from the US, which said that, and even the FOMC meeting, which happened last week, the Fed chairman came and said that the rate cuts are in fact coming. So if you look at the probability of rate cuts in different Fed meetings, the highest probability, people have really priced in that a rate cut is going to come on 18th of September, right? So in a couple of weeks, we are expecting a rate cut, and there's a very strong consensus of that. And people expect that during this whole year, the rates could be cut by, in fact, 50 to 100 basis points, which is very interesting. So this is the biggest event that will happen, because rate cuts, the US rates will define what happens in the whole global market. They define the demand for the dollar, they define the demand for bonds versus equities. They will define the liquidity in the market, right? How people can borrow money. If the rates go down, people can borrow money easily. They will define the future of many sectors and, in fact, the whole geography. So this is the biggest event that is going to happen, and this is going to be the focus area for all the news cycle and all the analysts in the next couple of weeks, I think, right? So the probability of rate cuts is high, but why? But rate cuts, theoretically should be a good thing, right? They should be a good event in the market. If rates are cut, we can borrow easily. So why are people worried about rate cuts? Let's try to understand that. So I think the concern is not about rate cuts, but the concern is actually about recession in the US markets. So if you look at this chart, you will see that this is a chart of probability of recession in the US market. And there is, the recession probability has gone down, but there is still some probability that is out there, right? It's non-negligible. And so, see, when when the US raised rates, right, when they were hiking the rates, what they were trying to do was they were trying to slow down growth in the economy so that inflation goes down, right? That was what they were trying to do. But what happens when the US raises these rates is that the growth could slow down much faster than what they were expecting, right? That they could actually throw the economy into a recession instead of slowing down inflation, right? So that is one concern that people have. And the problem is that this, while the rates might be raised or hiked today, impact happens in the next quarter or the next month or so, right? So it's a slow moving thing. And uh, the concern that people have is not about the rate cut but about the recession, right? Are the rate cuts coming at the right time to prevent the recession or not, or will they throw the economy into recession? So that is what we'll try to understand. So if you look at this, you will see that rate cuts are not a negative event. Rate cuts are a positive event if the market is not in recession, but rate cuts are a negative event if the market is in recession. So this is some data I picked up from a report, and you will see that in a recessionary environment, the market reacts very negatively to rate cuts, right? But in an expansionary environment, which means when there is no recession, the market reacts very positively to these rate cuts. And I think the biggest question to understand is that will the US have a soft landing, or will be a recession that sort of hits the US, right? So that is the big concern. But I think the probability of soft landing is increasing. People are expecting that the recession might not be there, right? Because the markets, the sentiment, and many of the macroeconomic data points in the US are looking quite interesting. So this is again, data on how the market reacts to rate cuts in market, as well as US Treasury reacts to rate cuts after, uh, you know, on an average in a recessionary environment, in a non-recessionary environment. You will see that on an average there's a positive impact, but in a recessionary market, right, when there is a recession in the US, it has a negative impact, but when it is expansion and is non-recessionary, it has a very positive impact, right? So I think that is the big thing that we have to understand, that will we have a recessionary environment or will we have a non-recessionary environment? That is the bigger questions. And if it is a non-recessionary environment, then we will see the resurgence of growth come back, which is something that we are a little bit convinced on and we expect that to happen. But obviously, a lot of macro data has to be studied and impact has to be analyzed to reach there. Again, see, we don't have a lot of data in India, right? If you look at Indian data, you will hardly find three or four, much fewer data points. So we are looking at US data, and in the US data you will see that whenever there is no recession after a rate cut, the market reacts positively. There could be a small drawdown, but it is not any market crash or nothing happens like that. But if there is a recession, if there is a bigger market impact, then there is a broader drawdown, right? For example, what we saw in 2008, 2019, etc. Right? So this is, like I said, recession is the biggest concern that we have to watch out for. And how probable is the soft landing? Soft landing means that whatever the Fed was trying to do, how accurately have they done it? Right? How well they have avoided that recession? So that is the biggest thing that we have to see. And now, what happens after a rate cut? You will see that typically, uh, initially, value stocks do better, right? Initially, value stocks will start doing better here, that you can see. But then, if you're looking at 6 months or a year, growth stocks will pick up, right? So, what we're seeing right now is probably people are pricing in that rate cut and value stocks are doing better. But eventually, growth stocks are going to pick up, right? So, we would see that play out in the market, hopefully. Now, in the next few months, I think, like I said, the biggest thing is going to be watching out US macro data and looking at the rate cut probability. You will see that in the next few days, there are a lot of data points coming up. FOMC minutes happened, and now we'll see payroll data, we'll see CPI data, we'll see retail sales data, which will define how much rate cut is going to happen, right? Will it be 25 basis point or 50 basis point, which is, and then we'll see the big impact happen around 18th, and we'll see the market moving around all these expectations in the next couple of weeks. So this is the what we are expecting, and this is what is going to define the sector allocations and where we invest in the next few um, months and quarters, right? Now let's quickly talk about our allocations, how we are allocating in our portfolio right now. You will see that this is our factor strategy. We do have some small cap allocation now. We have a larger mid cap allocation, then large caps. You will see that our allocation is in household items, consumers, along with your power, oil, infrastructure, right? Consumer durables. So it's a healthy mix of different sectors, and there is a fair bit of small caps that have come in around 15%. In terms of momentum strategy, you will see this one does not have a lot of small caps, but seems to have a strong allocation, highly allocated to pharmaceuticals, telecom, and consumer durables. In terms of our alpha strategy, this has a little bit of small caps. I don't think this is updated, but yeah. So here we have allocation to consumer durables, consumer food, engineering, cigarette and tobacco, etc. So a very good mix of stocks across all these three strategies. Now, I'll just wrap up by talking about again how amazing this year has been. I'll talk about the team which is behind us. You see members of our team who have worked really hard, and we are expanding. Like Pratishta has joined us on the sales team. We are adding somebody on the dealing team also soon to make, to build a very strong dealing room for execution and more app trading. And we have a lot of smart people who are working on different aspects of it. For example, Siddesh works on the onboarding, which a lot of people talk to. Shivam and Pratishtha on sales. They are focused on research, marketing, tech, etc. Right? So a big thank you from team Wright Research for being with us for this last 1 year, supporting us in this last 1 year, and we hope to do well for our clients in many more years to come. Now, what are we doing next? What are the exciting things that we are doing in our strategies? So, one interesting thing that I want to talk about that we have done is on position sizing, right? So, whenever a new investor comes, typically I do a deployment call with them, and they want to understand how you are going to deploy, and they don't want you to deploy the money on day one, right? They say that deploy whenever you see the right time, but finding the right time is difficult, right? So, what we've done is we sort of calculated a fear and greed index, right, which is based on a lot of market momentum, different indicators in the market, basis of which we have a level of fear and greed. So when there is a lot of fear in the market, we buy more. When there's greed in the market, we try to sell. So this time when we were looking to allocate, we ended up buying a lot around this time for our clients, and we saw the benefits of it because the market recovered after that initial fear. So this is something new that we have sort of mixed and sort of simplified allocation for us, right? So how much do we allocate? It shouldn't be based uh, on a whim. It should be actually based on a systematic framework, which is what we've done with this. Another very interesting thing that I am sort of playing around with is trying to understand sentiment and event data in the market. So what we're trying to do is we are trying to look at a lot of news. So we have very good researchers in my team who are sort of trying to use AI to analyze a lot of news data and extract events as well as sentiment. So how does any event impact the stock price? So which are the events that have the most negative impact on the stock price? For example, you will see something like concerns over business ethics or concerns over taxation or discontinued operations tend to have very negative impact on any stock. In terms of positive news, you will see supply chain management, social practices, and different things end up having a very positive impact on the stocks as well. So we're trying to work on this and sort of incorporate in our strategies also, which we're really excited about playing around with this data. And that is a broad wrap from my side. I think I covered a lot of key points, and let's go over to the audience questions. Pratisha, do we have a lot of questions?
We actually have a lot of questions and a lot of client feedbacks also congratulating us for the 1 year of PMS. And there are a lot of clients, who are really thankful, very happy with all the returns that we've got into the market. Should I start taking the questions?
Yeah, yeah.
Okay, great. So we have a question that congratulations on the awesome achievement and keep up the great work. Now the first question is about the AIF. In fact, that when do you plan to launch your AIF Cat 3 and similar products?
Wow. So I think it's very interesting that people are asking us that. Um, See, we are thinking about it. We have explored a little bit, but I think Pratishta here, people think that taxation in AIF is going to be lower, which is not the case, right? Even
Right,
in
right.
AIF, people are paying short-term taxes also. What happens in AIF is that you don't get to see the tax, right? The fund manager pays the tax, you just get net returns. Whereas in PMS, you get pre-tax returns and you pay the tax. So you get to see tax, but the taxation is same, so there's no difference as such. But we will explore AIF also. We are thinking about it.
Yes. So the next question is from Mr. Fawad Sheikh. What are the expectations from the next 6 to 9 months? Now that the market is, topping out, is it good to enter in PMS at this point of time, considering it's a 50 lakhs investment at an all-time high?
Yes, I think, see, we did our understanding of the market and we went through it. We expect the markets to be strong because I think there's going to be a soft landing from what it looks like. And the market will have opportunities, maybe in differentiated sectors. And we expect, there's opportunity to do well in the market. So why won't you invest in, right?
Correct,
So
yes.
I think we should allocate, and we definitely do expect the markets to be quite robust.
Correct, yes. We also have a question from Finance Guru. Hi Sonam, thanks for the performance. I'm interested in learning more about how to invest. Given how the market has been and where we are today, can I increase the allocation in the public markets at the time?
See, I think it's not a bad time to be in the markets, right? We are seeing a very strong market right now. You might have seen some overvalued sectors get a hit, right? Like we said, defense and railways and PSUs have taken a hit. But on the other hand, look at consumer stocks, a lot of defensive stocks, which are doing very strongly. Value stocks, undervalued stocks are doing really well. Agrochemicals and stocks in the chemical segment are doing well. So I think it's a good time to be in the market, and I think you learn a lot about how the sector rotation changes and how the macroeconomics impact the market if you stay invested in this market, right?
Right, that's correct.
Hmm.
So we also have a question from Mr. Dipanshu. What is the broader difference among all the three funds that we have?
Okay, so see, our first strategy, multi-factor, right? Is a multi-factor strategy. So there we are combining, for example, momentum, value, growth, quality, all of these factors, right? And I think I showed a slide also. Initially, we started with a lot of momentum allocation, then we added some quality stocks. Eventually, right now we have value plus momentum, right? So it's a multi-factor strategy. But our other two strategies, one momentum and one alpha, are purely momentum, right? They're purely trend based. And alpha is concentrated, so it only has 10 stocks, but our momentum has 20 stocks. So that's the difference, right? These are the three strategies.
And again, there are a lot of questions on the interest rates and the rate cuts. Looking at
Yeah.
the rate cuts are coming, should the liquidity in the market increase, and what impact can we expect on our investments going ahead?
Yes, so I
So we
think
have this question. Yes.
yeah, I covered a lot of it, right? I
Okay.
had, I think I spent like 10 minutes talking about that only. But yeah, like I
Hmm.
said, rate cuts are a positive event, right? They end up bringing in liquidity to the market. And you have to think about it from sector perspective also. For example, you would expect banks to do well or NBFCs to do well because interest rates go down. But there is pressure from RBI to maintain credit to deposit ratio. So they cannot actually lend more till we have more deposits, and deposits are not coming up. So you have to understand those dynamics. Also, real estate should do well because people can borrow more, but real estate is already at a very, very high. So you have to understand that infrastructure should do well because again they can borrow easily. Infrastructure is dependent on a lot of borrowing, but again, we have to see that those stocks have already run up at a high. Probably they have priced in all these rate cuts already, right? So a lot to be studied, and like we said, that the bigger concern is recession, right? If there's a recession, only then rate cuts are bad. Otherwise, rate cuts are a very, very positive thing.
Right. And Sonam, now, a few questions on what is your long-term vision for the quantitative PMS strategy?
See, I think when we started the last 1 year, when we started, obviously we had been doing small case for 5 years, and we were very, very confident by that point in time. But again, in the PMS framework, last 1 year, we have done so well, and we have been able to match some of the leading PMSs, do better than many of them. So it has given a lot of confidence in our quant strategies and our philosophy. So we are very pumped up of having completed this 1 year and having so many amazing people, right, who have joined our PMS. So we are very, very excited and very confident going forward.
Yes, that is very true. And again, Yogesh Sharma is saying that I have PMS with you from day one. Thanks for making wealth for me. Congrats to your team. Your returns are good, but the risk management is great. And wishing you 1,000 crore AUM in future.
Thank you, Yogesh ji. Thank you
Thank.
for being with us.
Yes. And so, how have the PMS portfolio relatively performed to the benchmark in the recent months and quarters? Is what somebody is asking.
See, I think in the recent months, like I said, in the last few months, our factor strategy has seen a little bit of underperformance, not like a large underperformance. And that is because we saw, right, some of the long standing momentum stocks have seen some correction. Uh, so that is one, but yeah, you see that our alpha strategy has really picked up in the last 1 month, right? It is one of the best performing strategies, close to 10% returns in that sense. So, I think we've done. And if you ask about me about this to me, I am not concerned at all about the slight underperformance, and that is because, imagine if we had the same allocation that we did in March. Now we would be hitting like a minus 20%, right? Because those stocks have really corrected, right? That allocation in infrastructure segment that we had, the PSU stocks have corrected. So we have done an amazing job in pivoting towards more value and more quality stocks, which I think is a great thing that we did, which talks a lot about our philosophy. Our philosophy has delivered in terms of the tactical shift, and yeah, I think the performance will pick up, right, as the market stabilizes.
Correct, correct, right. There's also a question from Squidby. Warren Buffett has been selling a big time, sold Apple, sold some other tech stocks too. Any thoughts on what Warren Buffett is expecting from the market, or could that be, profit booking, or what is your view over it, the market view?
See, I think Warren Buffett must be doing something really smart, right? So I can't comment on what Warren Buffett is doing. I think, see, what he is again, he manages a very, very massive amount of capital, right? And he's a conservative investor who tries to do value investing, right? So he might be booking profit, or preparing himself for any sort of risk that can happen after, regarding the recession. There's also a lot of overvaluation that has happened in the US tech stocks, so he might be booking that profit. But I'm sure he would come back to the market once the thing stabilizes, right?
Right, right, that's correct. And any So, again, a question on to consolidate in this market or to stay diversified. If you have to consolidate, which is the best product from your strategy to go ahead with?
See, typically many of our investors will go with a mix of our factor and alpha strategy, right? I would say consolidate, right? There's no need to be over diversified. So if you want to make better returns from the market, you have to be more consolidated. And here, you can take a split between our factor and alpha strategy. If you want to be moderate risk, then you should go with our factor strategy. If you want to take a mixture of moderate and high risk, you go with a mix of factor and alpha. and you can take higher allocation to alpha if you want to take more risk, right?
Right, that is it. And one more question on how the STCG will impact the returns.
Yes, so I think that's a big question that we keep on getting, Pratishtha. Like after
Right.
STCGs are increased, people are concerned that should we start doing less trading to do better. But we, Siddharth from my team, had published a very good blog on this topic, right? So, for example, if you compare 5-year basis returns of a mutual fund versus a PMS, right? So somebody who has a 70% short-term capital gain versus somebody who only has long-term capital gain, you will see that if a mutual fund is performing, for example, 30%, the PMS only has to do plus 2-3% performance compared to a mutual fund to do better than them. And if you actually go and compare PMSs versus mutual funds, you will see PMSs have actually done much better, right? Because they are much more flexible and much more tactical in nature in compared to mutual funds, right? So I think the type of strategies which we run, which are active, are still very attractive, and obviously, we are all going to pay more tax, right? That we can't control, but still, I think this is the most attractive way to invest if you want to generate higher returns, right?
Correct, correct, right.
Hmm.
Uh, yes, so the next question is, what are the current risks associated while investing in the PMS in the current market environment?
Yes, I think that's a very good question. I think the biggest risk right now is the fear of slowdown or recession globally, and obviously the geopolitical scenario, right? So geopolitics, seeing that impact with something happening in Israel and Ukraine and all that. US elections are coming. Those are big events, but I think the biggest impact is coming from the rate cuts, right? That is what is going to move the market, right? That's going to move the demand for dollar, that's going to move the demand for equities, demand for bonds, and the whole movement of for different sectors all together, right? So I think rate cuts are the biggest event. And like we said, like we discussed, rate cuts will be a positive event, a very good event in the market if there is a soft landing. Soft landing means no recession and hold this rate hike cycle ending, right? So I think right now the biggest thing to watch out is how accurate has this soft landing been. If there is no recessionary fear, then rate cuts are going to be a very positive event. In terms of fear, the only fear is of a recession happening in the global economy, which I think we have a lower probability of, right?
Yes. Thank you, Sonam. I think you've answered so nicely to all the questions, and I think we are getting a lot of questions, but it's more on the rate cut that we've spoken about.
Yeah, yeah. We've spoken a lot about it.
A lot about rate cut, yes. Can I do
Yes.
bulk investing in the HNI quant advantage? I want to learn about your PMS, but currently I am into your HNI quant. What's the major difference?
Yeah, yeah. I think HNI Quant is a exceptional product. There we do need-based rebalancing. We have limited set of users and focus strategy. So you can definitely try that out. The difference between PMS and Smallcase is very in PMS we actually do all the execution for the client. We do everything. In Smallcase, your client has to do all those things. So Smallcase gives you that DIY element. PMS has a much more smoother sort of allocation in that place. So that's the difference, and you can definitely try out our small HNI small case, and if you want to shift, then you can let us know. We can help you with that as well, right? But it's a great product. I think it's doing very strongly.
Sonam, we have a very interesting question. Ma'am, your story is a role model for the upcoming quant strategies that you've been doing. Any thoughts on where I can learn quants from? Any courses and such?
Any courses in such where they can learn from? Are they asking?
Yeah.
Okay. So we have a few courses. I think we've done a course on momentum investing, factor investing that we have with LearnApp and with Upsurge, right? Which you can get for free if you reach out to my customer support team. Um, uh, Along with that, see on our website we have a lot of these excellent, amazing quant courses, right? On algo trading, quant modeling, even LLMs and machine learning modeling, which we are sort of distributing in collaboration with some global researchers, right? So MLI Institute, AI in Finance Institute, Quantity Development Program, all of these institutes, we're collaborating with them, and we're giving you these courses as a very heavy discount in comparison to global prices. So if anybody is interested to take this up seriously, you can go to those courses and enroll into them.
Okay, I think I'll take up the last question, Sonam. And especially if there are a lot of questions about our factor fund strategies. What factors are we using for investing into it? This is asked by Mr. Motiwala.
Yes, Mr. Motiwala. So, if you go back to this presentation that I did, you will see that we have explained how that factors has changed, right? So, initially we did have a lot of allocation to momentum. I'll also share my screen if that helps. Wait. So, we did have a lot of momentum allocation. Then we added some quality, and now we have a lot of momentum plus some value allocation. So, I'll just quickly show you on my screen. Uh, right? So you will see this is the momentum allocation. We have been heavily allocated to momentum, but we've added quality sometimes, and right now we have momentum and value as allocation. And if you want to explore more about it, sir, you can schedule a call with our team, and we'll be very happy to take you through this in depth as well, right? Awesome. So I think we are at the end of the question, Pratishtha.
Yes, we are at the end of questions. Yes.
Amazing. Perfect. Uh,
Yes.
the questions keep on coming. I can
Yeah,
see our
there are a lot of questions. Yeah, actually, there are a lot of questions which are still coming. Right, team seems to do marvelous job under this. Miss Sonam has been doing a great thing. Vast experience in this field.
yeah, yeah. I can see our existing investors also talking about if it is the right time to top up the PMS. I would say, see, so we are trying to, like I said, we have devised our own flow algorithm where we buy when we see that the market is at a bottom. So if you want to, if you have cash to deploy, you can put it into the PMS, and we will deploy it as per the market, right? So you can top up the PMS also. We would recommend that. Somebody is asking, I think our existing client Rishabh Verma is asking what is the percent of net worth you should put into the PMS. I think, see, the question is, Rishabh, that how much of your equity allocation do you want to have in your total allocation, right? Let's say you have 70% equity and 30% you're holding in debt and other instruments. Then on the 70%, you can actually take a concentrated bet with a PMS because, you know, the type of strategies we run are a low risk strategy. So they will really fit into your risk profile. We're not taking some very crazy risk or anything out in our strategy, so they can be a significant portion of your equity allocation is what I would say. Some people are asking how to apply for PMS. So what we'll do is we'll also paste a link, right, of our PMS website. You guys can go to this website. You will find a link which says talk to an expert, right? Or where you fill in your details and you can schedule a call with our team. So you can talk to either me, Shivam, or Pratishta, who will be there on the call and who will explain everything to you. So I think that is pretty much it, Pratishta. So, how was your experience, Pratishta, for your first webinar?
Yeah, this is actually my first webinar and a lot of, insightful things learned from you. And of course, it's always great to learn a lot of things from you.
Thank you, and I hope you were happy to meet our investors also.
Indeed, very happy.
Perfect. So great, great. So thanks a lot, everybody, for joining us on this 1 year webinar, and we'll see you again next one. And we hope to have a strong performance in all our portfolios and seeing our area grow multifold from here as well, right?
Thank you. Thank you, Sonam.
Thank you.
Thank you.